Gold has gone into reverse in the last few days, moving down back below 1,500 per ounce. Likewise, silver down from its recent highs. What's happening? And is there a gold trade around Brexit? Well, we're joined now by the head of research at bullionvault.com, Adrian Ash. Adrian, welcome.
Thanks, Jeremy.
Bullion Vault, I think you're the world's largest online trader of the physical bullion, aren't you?
That's right, as a platform for private investors to trade physical bullion. So it's all vaulted gold, large bar, Italian job, gold finger, and then you can own part of one of those bars. So we've got 75,000 users worldwide. 40 tons almost of gold.
So what are you seeing then in terms of the appetite for gold? Not necessarily in the last few days, which I said is off the highs. We've seen this big push up in gold and subsequently silver. What's the message that you're delivering to clients?
Well, in terms of what we've seen through 2019, because it's been really a year of two stories so far. The first half of the year, whenever we saw a rise, we saw our existing client base selling and taking profit. Particularly with sterling and euro customers, half of our client base is UK. About half of the other half, so a quarter, is then Eurozone, and then it's US and rest of the world. Particularly with sterling and euro gold prices then reaching all-time highs over the summer, we have continued to see existing customers taking profit because you're record highs now in sterling and euro prices, which I think has really not reached the headlines in a lot of places. That speaks of crisis, quite frankly. All-time record highs in the gold price says things are not going well, either for the Eurozone or for the UK. For the US, we're now above 15, or currently cracking around that level. I think 1535 is an interesting level where we've got to, and we keep failing at that, because that was actually the floor in the gold price after its peak in dollar terms back in 2011 through 2013 before it crashed. It broke through 1535 on the way down in April of 2013 and hasn't looked back until this year. Now, why are we here? We're here at the moment, I think, primarily because of the move lower in bond yields. Gold typically goes in the same direction as bond prices, because when interest rates fall, the opportunity cost of owning physical gold falls. The opportunity cost, more importantly, in the derivatives market of rolling a position forward also falls. That makes gold a much cheaper speculation on trouble ahead. So I think that's really what's been driving the price. Now, in the physical market, what we have seen, however, and what we saw in August, was a sudden turnaround in the retail market. Yes, existing customers continue to sell, taking profits, but we suddenly saw a huge surge in new interest. So we saw the most new UK users in August in any one month.
So new clients?
New clients joining Bullion Vault for the first time, buying physical bullion for the first time. The most since Trump's election. Same for the US. We saw a record month for German new business and a record month for new Spanish business. So a real change in August. And what changed in August? I think the breakout in gold, the obvious move higher in gold prices began to attract attention from private investors and from people who are really concerned about, what is going on, how am I actually going to preserve long-term value in my savings, in my pension.
Just switch, if I can, to take a quick look at silver.
Sure.
This is the daily chart as well. We had this rather late spike up, actually, in
Yes.
silver. Silver was relatively late to the party in terms of the rise. I think we saw the spread get as high as 93.95, I think, the gap, rather, between the two, dividing silver
Yes,
prices.
on the ratio, yes.
That's right. It's now back at around about 80. So
Yes.
this rise in silver has closed that gap a little bit. What do we take away from the fact that silver was late to this rally that we've seen in gold?
Well, earlier in the summer, frankly, the move higher in gold was looking a little bit precarious because you didn't have the gold mining stocks moving higher. You didn't have silver moving higher. Traditionally, you would expect to see the whole precious metals complex moving higher together to say this is a sustained, sustainable rally in the gold price. So gold was out on its own. Why? Well, particularly silver, platinum, palladium, are primarily industrial metals. 60% of silver demand comes from the industrial sector. For gold, that's below 10% now. Gold is a store of value. So when you see gold moving on its own, it's actually quite a deflationary signal because it says that store of wealth is going to be more important than trying to make a return. Silver is often seen as being an inflationary geared play on what's happening in the gold market. For silver to catch up late, what really drove that move last month was actually short positioning in the COMEX, speculative shorts coming off in COMEX. The speculative betting on silver, whilst only a fraction of what you see in gold in terms of value, has become really quite a phenomenon. The hedge funds, the managed money, all rush, a bit like the anthill mob, they all rush into one side and they all rush to the other when it goes. Now, whether these guys are leading or following the price, I think it's indicative that the speculative money found itself short of silver whilst gold was moving higher. And eventually that cracked and they all came off, and that's where you saw that huge move in silver late in August and then through into early September, where silver then broke above $19 the ounce.
Yeah. Now, I know you can't give definitive price targets and so forth, so I'm not asking you about that, but what about the move? I mean, do you see more upside to both these precious metals, broadly speaking?
I mean, as I say, half of Bullion Vault's client base is UK, and I think it's very difficult not to associate what's going on with gold for UK investors with Brexit.
Okay, now this is an interesting potential correlation.
Because of sterling.
Right, okay, so it's a sterling
huge,
okay.
To an extent. I mean, if you are concerned about a currency crisis, wherever, whatever your domestic currency might be, gold is an obvious go-to. Has been throughout history and always will be. I think we've definitely seen that in sterling. What's interesting that we've seen is that the sudden upturn in new interest has been broad globally. It's not just about Brexit, but I think in terms of price looking forward, a resolution on Brexit, which is anything other than a disaster, may be short-term bullish for sterling. Obviously, we all have our individual opinions about what the longer-term outlook might be, but certainly the currency market thinks that a no-deal Brexit will be a disaster, and I think he's likely to find some relief on anything else, whether Johnson gets a new deal, whether there is a delay or whatever it might be. If we move towards a second referendum, all bets are off on quite where we're then heading. So I think gold volatility should be expected either way. I think in the dollar, I think the growth of the real upswing now in the currency wars. We know the ECB this week. Draghi's going to try and leave with some big fireworks about sustainability for the euro. This is the guy who said he'd do whatever it takes, and he'll try and do it again. What will Trump respond with? How will that work through? What will Trump do about the Fed next year? Is Judy Shelton a shoo-in for being on the Fed board here? What's he going to do about Powell? So I think currency volatility is guaranteed. I think sterling may well be a victim of that, whatever way it goes longer term. So I think gold as a safe haven from that particular angle. It's very difficult to see this being the top at £1,200 the ounce.
Yeah.
We got to what, 1280
in sterling,
in sterling, and euro price is at 1400. I mean, really quite a move against the euro, and this is not making news.
Yes.
I'm quite staggered that euro gold prices. Don't forget, Germany is now the 4th largest buyer of gold as a private consumer nation, and what is phenomenal about the German gold market is that everywhere else in the world, gold is primarily a jewellery asset.
Right.
China, India, the big consumers. Germany, 85–90% of gold demand is for investment. It's coin and bar. It's really quite a phenomenon in the German market, and they're currently looking at all-time record high prices. But as I say, we saw a record new interest on Bullion Vault from Germany in August.
Okay, right, it brings us up to date with what's going on. Adrian, as ever, thanks indeed for joining us. Adrian Ash is Head of Research at bullionvault.com.